In this presentation, we will enter payroll or go through the process of paying employees within QuickBooks Pro 2019. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are on the home page. We currently have the Open Windows open. You can open the Open Windows by going to the View tab and Open Windows List. We're going to go be at the Employees section on the bottom of the home page where we see these three icons. If you don't have these three icons or the payroll is not set up yet, we've gone through that in prior presentations. So if there's different options to set up the payroll, how are we going to process payroll? Within QuickBooks, there's at least three different layers of options that you do have to set up payroll, each giving a bit more service and each taking a bit more responsibility from us as the data input and into the system to QuickBooks over that payroll entry and the reports that will be generated and have to be given to the federal and the state requirements. We also have options to do payroll outside of the QuickBooks system and either integrate it within it or do a journal entry in some way to enter that information. So those types of options would be with someone like an ADP or Paychecks. So if you have questions about how to set up payroll, you can go through those items. We here, for practice purposes, QuickBooks Desktop has a great setup for practice purposes, and that is to set up just the manual payroll. And so that's what we have set up here. It's really great for practice in terms of data input because the data input will look much the same and because it kind of forces us to enter the data for withholdings and think a little bit about what those withholdings are, and how are they calculated. Whereas when we just enter payroll, we usually and we buy the most, the best payroll system within QuickBooks, or any payroll system within QuickBooks will help us to calculate many of those numbers, and we won't really understand what QuickBooks is doing. We're completely reliant, oftentimes, depending on our knowledge of payroll, on the system. And that's risky because if we're completely reliant on the system, we should have some understanding. And so payroll is often a case, again, where we would probably want to have outside help from a CPA firm that would help us to set up the payroll items and make sure it's all processing smoothly, go through the quarterlies and yearlies, or having a payroll professional to look at that. So just keep that in mind as we go. If your payroll looks something like this, and that means that you have payroll set up in some way typically. If you don't, you can go to the payroll, turn on payroll over here, and that'll give you some options for payroll. This item, the time clock, is where we can actually enter time and track the time that's being entered into the system. So if we have hourly employees, we can enter that into here. We can also use this to help us to bill customers, such as customer jobs, based on this information. We're not going to use this item. Oftentimes, many companies will use the system outside of QuickBooks to track time and use QuickBooks in order to actually pay the employees. And that's what we're going to do here. So we're going to be using these two items. This one will be to pay employees. Now, if all of our employees are salaried individuals, that would be another reason why we may not use the time clock here and might just use the pay employees, or we can enter the hourly times that were worked here. Again, if those are standard or set typically, then they'll be the same for month to month, and we may not need to track the time within here, or we may use some other kind of format to track time, such as a time clock, or someone actually filling out a timesheet on how much time was worked through a time period. And then we'll pay liabilities. When we enter the information here, that's what we're going to do now. That's going to create the net check that we pay to the employees. And then later on, we're going to have to pay on the liabilities that we owe for payroll liabilities, payroll taxes, typically, and other liabilities, but payroll taxes, including federal income tax that we took from the employees, and the withholding for Social Security and Medicare are the main federal taxes. Really important to get those correct, because if we don't get those correct and we don't pay the payroll taxes properly, then the IRS could say that we are not only not paying our taxes, but in essence stealing from the employees because we withheld these taxes from their paycheck and then didn't pay them. We kept it. That's how they could see it. And therefore, payroll is really something we don't want to mess around with. We want to pay the payroll taxes because it has that added layer of the idea is anything we withheld isn't really ours. So if we don't pay it out, we're keeping something that isn't ours, which adds a layer of liability over and above just not paying taxes. Okay, keeping that in mind, we're going to say pay employees. And this will be the similar screen no matter what type of system we're using, as long as it's within the payroll system. So the first thing we want to do is make sure we get the pay periods set up correctly. Now, there's 2 dates here. So one date is going to be the period end. We're going to pay ours monthly. So 01/31/19 at the end of the month. And it's going to be the same day in 01/31/19 that we write the check. Not always the case. I mean, these could differ. We may be writing the check sometime after the pay period end, which is could happen. That might just be the way the system is all the time. We may always pay people, a couple days after the end of the pay period. We, of course, are paying people in this case on a monthly basis, and therefore we're going to pay people at the end of the month. We're going to say it's going to happen at the end of the month here. Again, it may take us a little bit of time to process the actual hours. So it's very typical that this may happen, that we have the pay period end at the end of January, and this second date when we write the check be a few days after that. So we have time a week after that possibly. So we have time to track how much is owed. Just depends on the system we set up. So it's going to come out of our checking account. Note that we have a company that just has the checking account. If we have the ability to do so, and we have a significant amount of payroll, or even if we do not have a significant amount of payroll, it's good practice sometimes if you choose to set up another account which is just for payroll. And if you do that, what you end up doing is taking some money out of the checking account each time, putting it into the payroll account, and then writing the payroll checks out of payroll. Takes another step in the process. Why would we do it? Because that makes it easier for us to look at the bank statement. So if I look at the bank statement and all I have in there is payroll, then that's a lot easier for me to go in there, because payroll is an area where there could be problems. There's a lot of transactions in payroll. We're going to pay not only the employees but withholdings. So it'd be easier. We don't want to have to go searching for a payroll check and not be able to find it. And it's easier to find it if we have a checking account that only has payroll transactions. So just be aware that might be an option you want to set up. We're going to use the same checking account here. Then we have the check options, print paychecks on the check stock, or we're going to handwrite and assign checks. Now, of course, we're doing a practice problem. We're going to actually write the checks. If we had if we had actual checks that we're going to print out, then and put in the system, we would choose this item here. If we're writing the checks, then we're going to choose this item here. Be aware that if you are writing checks, you do need the pay stub in some way, meaning we have to tell our employees how much they earned and how much we withheld from them, both in this pay period and in the year-to-date numbers. So that added information is something that we would have to still want to print from the system in some way, which we can do, and give them that information so that they have that. Okay, so then we've got, in our case, we got these 2 employees, and we could differ the sorting, and we can show and hide columns here. We're going to pay both of these employees so we can check them both off. Now, if we had the full service set up for payroll, it may just populate this information for us for the most part, but we're going to go into this information and look at what's included for these 2 employees. What is the actual breakdown of the payroll? We're going to have to manually input some of this information. So we're going to go into the Adam Hamilton, and we can see that he's a salaried employee. The payroll salary is $4,583. We had entered that into the system prior. We said, hey, he's an annual employee. He makes so much. I think it was $55,000 a year. And so it's going to break that out monthly and bring that number in automatically. We don't need any hours because it's all in there as a salary. Then we have the customer job. This would be if we wanted to assign those hours to a particular job, if we wanted to then use this information, to track the customer costs and then bill them to a particular job or track those costs within a particular job. We can see down here that we have the salary also down here, and the net check is currently the same as the salary, and that's of course the problem. QuickBooks, if we had paid for the payroll, would be telling us that there are federal withholding and Social Security and Medicare withholdings. Because we did the manual calculation, those things are not included. Now, we're not going to get into a lot of detail on how to calculate these things because, again, You really don't want to calculate them each time as you go because that leaves a lot of room for mistakes unless you're a payroll professional to do that. That's difficult to do. We want the system, some kind of system, whether it be a CPA that helps us, an accountant that helps us, or a payroll professional, or at least the computer, which is going to help us to look up that information. But it's a good idea to go through and enter this data so that we can see what it looks like, what we're actually doing. So first, we've got the federal withholdings. Now I'm just going to say that it's negative 720 here. That's what we're going to take for the employee's federal income tax out. Why am I saying 720? Again, I'm making that number up, but we could find that basically based on if we go to the circular E, we could find a table that would have that number, and those tables would be based on the amount that was earned through the time period and the number of allowances that were given, and this information would be gotten from the W-4. So again, note this one's the most complicated to really calculate by hand. We'd have to actually look up tables to figure out what the withholding would be based on the amount, based on the payment period, monthly in our case, based on the amount of allowances. If we have the computer system, of course, doing this, this is a huge benefit and why you probably want to pay that minimum just to get this calculation, it being the most difficult typically. The Social Security, that's going to be easier typically to calculate, but there are common mistakes that can be made with it. Again, it's a lot easier if you let the system put that information in place rather than calculating it on your own. It should be something like the 4583.33 times 0.062. So, so we're going to use something close to that in our problem. So we're not going to be exact on that, but just be aware that this is just a practice problem to show that we're going to take money out for Social Security, which is more of a flat tax normally. The reason the federal income tax is more complicated is because it's a progressive tax, which means it has multiple tax brackets, difficult to calculate unless you're a computer. The Social Security is more of a flat tax, so it should be easier to calculate typically, but it does have a cap on it, and it's, again, something you don't really want to mess up because then you have to correct it at the end of the year, and that becomes a problem. So if you have the computer, QuickBooks doing it, it'll do it automatically. We're going to assign it and say that the check's going to go down by $258 for our practice problem. And then Medicare is the same way. These are two like FICA taxes, and so we're going to say that Medicare should be something like the salary 4583.33 times 0.0145. So around 66. We're going to use something close to that again, not exact, just a practice problem. But just be aware that that's easier to calculate. Again, if you have the software, QuickBooks will do it for you. And so that's why you want probably at least the minimum package in order to do that. And you still probably want help from an accountant for payroll just to kind of double check that these processes are going correctly. Now you would think that would be done because, and it kind of, we're done with the paycheck side of it because now we're going to say, okay, we owe this person, Adam, 4583.33. We're going to keep from them, not pay them 720, not pay them minus 258, not pay them 66 of what they earned, and only write them a check, Adam a check for $3,539.33. And Adam's going to say, why didn't you pay me what I earned, $4,583? Are you stealing from me? And we're going to say, no, we're not stealing from you. You earned $4,583, but the IRS, the Fed, makes us be their police by taking the taxes that we believe you owe based on the estimates you've given us on the W-4 and taking those from you before you even get it. And then we're going to make the payment to the IRS. Not because we like to do that. I'd rather give you the full $4,583 and you pay your own taxes. That's how I, as an employer, would prefer things. But the government wants me to police that activity and have to do that on the employer side. And therefore, we're required to take out these taxes that are the employer's taxes, your taxes, not our taxes, and then pay those to the IRS for you. And so that's what's basically happening here. Now we would think that would be it, but no, we've also got the employer side of the taxes that we have to pay. So these are going to be taxes that will not come out of the paycheck for the employee. but for which we owe taxes in addition on because we have the employees. So it's based on the employee's taxes, but it's something that comes out of the employer money. So these taxes, in theory, come out of the employee's check. These taxes over here are going to be coming out of our checking account, not something the employee earned, but what we have to pay over and above what they have earned. And what we're going to do is we're basically just going to match the Social Security. So it's going to be 258. So these aren't the same. They're the same amounts, but they're not the same in that we're going to pay it twice, right? This is going to be paid by the employee. This is going to be paid by the employer. If you're familiar with like a matching system for a 401k plan, it's kind of similar. That's what they tried to mirror exactly when they set this up. That it's not the same as a 401k plan, but we won't get into that. But the actual payment looks the same. So we're going to say that the 258 by the employee and 258 by the employer. Same with the Medicare. 66 by the employee, 66 by the employer. So that's the basic of it. We're not going to get into the federal unemployment, which is a federal tax only on the employer side, and we're not going to get into any state taxes here. So this is just going to be a brief outline to give an idea of what these taxes will be as we enter it manually. Again, you probably don't want to enter it manually in practice so that these will populate through a computer system, picking these things up and hopefully being able to check the tables very accurately, and or having advice from at least the computer with some kind of purchase program, and preferably from a CPA or accountant or payroll professional. Okay, so we're going to say save and next. And now we're going to do the same thing for Erica, except she's an hourly employee. So here we're going to say that Erica worked 20 hours. We're going to say that she makes $40 an hour, and that'll calculate for us the 800. So 40 times 20 is 800. Now we're going to go down here and do the same thing. Erica's going to have federal income tax withheld that we take from her paycheck, not to keep, but to give to the government, of 110. Where did we get that number? From the information on the we made it up, but we would get it from the information on the W-4 that we would then use to look on the Circular E on a table and look up the amount on the table based on we pay her monthly, we pay and the number of exemptions that she's going to have that she gave us, and then look up that information on the table. Or of course, if the computer would look that up for us, preferably if we had purchased the system that would do that for us, which is very nice. Social Security, we're going to say it's 49. Again, that one should be easier to calculate. Oh, what did I do? I hit enter. I'm going to go back on Erica here. We hit 49. It should be something like 800 times 0.062. So 6.2%, 0.062. So it's about 49. We're rounding it for our problem here. And then Medicare, we're going to say is 11. So I hit enter again. So I'm going to go back, click it on Erica, don't hit enter, and use tab. And then so we're going to say 800 times 0.0145. That's usually the Medicare percent. So, and it's usually flat, so it's close. Again, we didn't use the exact number. So note, you can't do that flat calculation up here for federal unemployment, but you can do a flat calculation for these two, although there's still caps and there's still, plenty of room to make errors. So then we're going to match that on Social Security down here. So 49 and 11 are Social Security and Medicare that we will then match on the employer side. So again, Erica, we're going to say, yeah, you earned $20 times 40, or $20 times 40 hours, 800. But then we took from you 110 for your federal income taxes. We took from you 49 for your Social Security. We took 11 for Medicare. We don't get to keep that. I didn't want to take it from you. I wanted to give you the 800 and have you pay your own taxes. I don't want to have anything to do with them, but I'm required to do so as the employer. That's kind of, and so that's what we do. So your net check is that 630. This amounts, we don't get to keep those. We're going to have to pay those to the government on your behalf. Not only that, but we're going to have to pay these two amounts on top of that just for added payroll taxes. So then we're going to say save and close, and that should be it. So now we're going to continue through this, and we're ready to basically process the checks. As we do so, if we had printed the checks, we would put the checks into the printer now, And then when we say continue, it'll print the checks starting with the first check number we assigned. Or if we write the checks by hand, then we're gonna assign the first check number, write the checks by hand, but still print the pay stub for the employees. So I'm gonna continue here, and we're gonna say create paychecks, and then and there it is, print your paychecks and distribute to employees. And then what we would want to do is not print the paychecks, but print the pay stubs. Now here we don't need to do that either way, but just if you were to do, I'm going to go ahead and say close this, and then I would check that the payroll has been done by going to the register now. So I'm going to go to the check register, going to up top to the banking. We're going to use register, default to the check register. We're going to say okay, that's the one, and we're going to go down, and here's the two checks, and you know it's a payroll check because it says pay check. So that's going to be the thing. Now, if you check on it, it's still just a check. We wrote a check. But if you double click on it, you get a lot more of this kind of information from it. So you got, it doesn't look quite the same because it's a payroll check and you got this added detail. Now, if you want to look at the paycheck detail, then you go on this item, and then that'll give you the input screen so you can see exactly what happened. Closing this back out. If you want to print it, you can print then just the pay stub. So if we print the pay stub, then you're going to be printing the information that's going to be necessary for reporting purposes. So if we preview these, we're going to say that we have this information, and this is for Hamilton. So we've got the current check, and then what we took from Hamilton, and that gives us the net pay. And then we did the same for, let's see if we can zoom in here a bit. And then we did the same for the year to date, which is the same because this is the first payroll check we wrote. We have to give the employee this information so that they have it for their records. If we just give them a check for $3,539, that's not sufficient because we took $1,044 from them, and from a regulatory standpoint, we need to tell them that, not only for this check, but from a year-to-date perspective. So I close that out. I'm going to close this back out, and I'm going to close the paycheck. And let's take a look at what happens on the financials. So we're going to go to reports up top. We're going to go to company and financial, and let's go down to the balance sheet. I'm going to change the dates to customize report. We're going to go to 01/01/19 to 12/31/19 and say OK. And then of course our checking account should have gone down. If we double click on the checking account, we see these two paychecks. So there they are. If you double click on either of them, you'll see the information here. If you want more detail, paycheck detail. So we can close that. You also note that it's a paycheck because it will say in the items here a paycheck. So again, this is a check, this is a check, this is a check, this is a check. They're all different names for a check, but these little indications give you more detail in terms of what type of check it is. So then we're going to close this back out. Now the other side is going to be in the profit and loss. So we'll go down to the reports. We'll go to the company and financial and profit and loss. Change the dates to 01/01/19 to 12/31/19. And here we have it, and we see that our payroll expense now is that $5,767. Double clicking on that, and we see the detail here. So notice it's broken out because if I double click on this item and look at the paycheck detail, we've got the $4,583, but we also have these withholding amounts, and we also have the company amounts that we have to pay, the $2,585, the $258, and the $66. So if we close this back out and close this back out, and we take a look at this, this amount is actually the full amount for the paycheck that's being recorded. And so note what we're not doing here is we're not recording this check that's paying to them and breaking out the payroll taxes of Social Security and Medicare that we took from them. And then you might say, well, it looks like we are because here's Social Security and Medicare. These aren't the two taxes that we took from the employee. These are the taxes that we paid over and above. So if we were to break this out, and the way you may want to break this out in would be more proper most of the time is to break this out between payroll expenses and payroll taxes. The payroll expense is really this amount. This is the full amount we should have in here. QuickBooks puts it all into payroll expense. But really, this is the payroll expense here, and it includes the amount that we took from the employee for their taxes, because they're not our taxes, they're their taxes. So we put the full gross payroll check, not the net check, in the payroll expense. And then these two amounts here are the amounts that are our taxes, the employer taxes. These are taxes we had to pay over and above the gross check to the employee, the amount the employee actually earned. And therefore, these are really the payroll taxes that we have, that we owe. So we're going to close this back out. And now you might say, well, if we owe that, that should be represented somewhere. So if we go back to the balance sheet up top, and we say we owe the taxes now, so that should have been generated as a liability. And here we have the payroll liabilities. So payroll liabilities, if we double click on that, we're going to say we've got all this information. They break out between Hamilton and Robinson, you know, Adam and Erica, our two employees. So this is breaking out the detail in terms of these. It's all the same check number that created these, but for this check number, it's breaking out the types of taxes. So we've got the federal income tax, Social Security employee, Social Security employer, Medicare employee, Medicare employer, and then Erica, we've got the federal income taxes we took from Erica, Social Security we took from Erica, Social Security we had to pay, Medicare we took from Erica, Medicare we had to pay. And this total amount then is what we owe. In this case, we owe it pretty much all to the same place because it's federal income tax, federal Social Security, federal Medicare. But when we make the payment, we got to make sure that it's going to the correct agency. And if we had state taxes, we may have those added into the same payroll liability. And when we make the payments, we got to make sure that they're being paid to the correct organization. So you can see that the payroll journal entry is pretty complex. So you want to make sure you get some kind of support on the payroll journal entry, whether you do the payroll internally or get support with an accountant, or if you do payroll with the support of a payroll company. And note what the journal entry basically is doing. The basic payroll journal entry would be, if there was no withholdings, would be easy. It would just be a credit to cash and a debit to payroll expense. But because of the withholdings, we end up with two journal entries that are fairly complex. You're right, we're going to credit cash, decreasing cash. We're going to debit payroll expense, but we really should only be debiting payroll expense for the amount of gross wages, and then we should debit payroll taxes for the employee taxes. But we actually, QuickBooks puts those both into payroll expense. So the debit's going to be payroll taxes that are the employer taxes and the gross earnings from the employee. And then we credit the liabilities, which are payroll liabilities, those liabilities being for what is owed by the employee and what is owed by the employer. And of course, later on, right now, we paid the employee the check. So we paid them the gross check. Later on, we're going to have to pay the payroll liabilities. What will that look like? We're going to credit or decrease the cash, the checking account, and we're going to debit or decrease the liability at that point in time. And then we will have finally fully paid the payroll and the related payroll taxes. For more accounting information and accounting courses, visit our website at accountinginstruction.info.